Well, good morning, everyone. Thomas Montgomery here. It's great to be with you this Friday morning, March 28th, 2025. We get together most weekday mornings at this time, talk about strategies, tips, techniques, share success stories, and support each of you. I think, as many of you know, we're a 501c3 nonprofit. We applied for and actually have received a couple different grants, but one of the grants requires us to provide routine and regular financial literacy education. And so that's one of the reasons that we're having our topic today. Our topic today is also what the question of the day is: what does it take to get a large business loan? I think the problem is a lot of you know what this is. It's what we would call the formula for funding. But the average person doesn't know this. They don't know what you know. And I think it's real easy for you to make the mistake that other people know this recipe. And so we're going to go through it today just to make sure we have a common understanding, but also to answer any questions you have. So that way we're all on the same page. But as usual, what we want to do is make sure first that everyone is open for business. So our distribution model is built around having resellers, and we're currently creating a state directorship, a state director for each state, but we'll leave that aside for a moment. So anyone that wants to be a reseller is welcome to be a reseller. It's free, no cost, no contract to sign. You can become one here on the 509pacific.org website. Once you've completed that, in short order, they should be sending you an email, which we call the implementation packet. The implementation packet has a number of editable documents, including the editable client agreement. You'll want to remove our information, replace it with yours, and change pricing for the Shelf Corp the way that you would like. So everyone needs to be open for business. Secondly, everyone should have their landing page. Now, you can create your own landing page if you want, but we provide this landing page, and it's meant to do a couple things. It's simple. It's a place to drive your prospects into. It's linked to you, so when you see that number, it's unique to you. And as your prospects come to your landing page, what happens is it will put them into a drip marketing queue. So they'll continue to receive more education and more promptings. So everyone should have their landing page. If you want to create your own, you can. This is the one that we created, has my company car on it, but you can create your own with your own company car if you want. So you don't have to use our landing page. If you don't have your landing page but need it, email us support@businessparalegalcorp.com, and it comes free with the reseller marketing program. So it will include us setting up your editable client agreement. It's built into the drip campaign, so it's prompting people to sign, includes the landing page, and includes the drip campaign. All right, so that's number one. Let's move on to number two, our topic of the day. And it links to the question of the day. What does it take to get a large business loan? Well, maybe it's easier to start with what it doesn't take. Does it matter how badly someone wants money or how badly they need money? No. Does it matter how long their business has been around? Some people say, well, you have to be open at least 2 years to get a business loan. No, time in business is not one. So let's actually go through very factually. No salesmanship, no BS. Let's just answer the question of how to get a large business loan. Now, notice business is in here. We're not talking about personal loans. Personal loans are different, not really what we focus on. So we're talking about business funding. Well, it might make sense that if we want to get a business loan, we do need to have a business. Now, that's a very simple one-word response. There's more to that, right? So the business actually needs to be a compliant business. Well, what does that mean? Well, it needs to be compliant both at the federal and state levels, because there are obligations and paperwork to form and maintain a business. and there's obligations at the state and at the federal government level. So we do need to have a compliant business. So just having a business itself, not enough. We need to have a compliant business. So let's pause there. Anyone have questions on number one? And Michael's bringing up a good point. So, what you and I do is help people with shelf corporations, which is what's on your landing page, and that's what you get when you become a reseller. So, the shelf corp is a very convenient way for an individual to have a fundable business, but they don't have to get a shelf corp to have a fundable business. So we're not just trying to sell shelf corps here. We're stepping back and educating what's needed. So is everybody clear on this? Because you may run into clients and say, oh yeah, I have a business and I formed it a couple years ago. Well, great. Have you been filing your tax returns? Is it in good standing? And a lot of times that'll be an issue. So we need a business that's compliant. Now, is there anything else about the business that's important? Yes. Yeah. We also need a unique, if I could spell it, commercial address. Now, when I go through this list, I'm not telling you my opinion or frankly asking your opinion. This is just what it takes for normal business loans of any magnitude. So can we get a large business loan if we're using a post office box for our business address or a home address or one of those shared virtual addresses? Typically not. Typically not. So we do need a unique business address. And again, you and I know we provide that for free with the Shelf Corp. So that you almost see a checklist here. What does it take to have a fundable business? And what is included in the Shelf Corp? But unique commercial address. Now, that doesn't mean where the individual works from. They could work from a cruise ship. They could work from the beach. They could get an RV and travel across the country. This is not talking about where the owner works from. We're simply talking about the official address of the business matters. We provide that for free, but that matters. Can anyone think of anything else that's needed specifically from the business perspective? Joe asked, can the business be an LLC or C Corp or S Corp? Yes, could be a nonprofit. Different lenders have different preferences, but those are all examples of a business entity. So we need, and I guess Joe brings up a good point, so we'll clarify that. We need a business entity. Jimmy brings up a good point. We also need to have an EIN, which is correct. That was kind of inferred here. So this part's pretty basic, pretty simple. There's a few other little things like we need a business phone number, but minimal other items. But this is at the core at the business level. And again, we provide all that with the Shelf Corp. Now let's move in to maybe where there's less understanding. I think most people are pretty much on the same page of number one. And it comes down to what we often have talked about, the 3 C's. And we're going to dig into each of those 3 C's, what they mean, why they're relevant, and again, how the Shelf Corp covers it. So who can tell me what one of the 3 C's are? There's 3 C's that impact a business's credibility. Who can tell me one of them? All right, Amanda says collateral. That's right. So what is collateral? Collateral are the assets that the borrower pledges that in case of failure to repay, that the lender can essentially repossess, take ownership of, take possession of to mitigate their risk. So collateral is important. Now, do all business loans require collateral? No. And there's different lenders and different loan programs, but in general, so we need to talk about in general. In general, collateral is needed for loans above 25,000. So that's why we define this as how to get a large business loan. If what we're trying to get is a $5,000 business loan, there's obviously going to be less credibility standards, but collateral is important. Now, collateral could be a number of things. It could be personal assets that the business owner is willing to pledge, or it could be assets of the business itself, like inventory, equipment, real estate, accounts receivable, so forth. So we know that many small business owners lack the collateral. So that's provided. It's included with the fundable shelf quote. Now, the collateral that we provide is in the form of accounts receivables. And if you're not familiar with this, I don't know, this is the format to bring you up to speed with Accounting 101, but AR, accounts receivables, means that it's monies that's owed to the business. Maybe it's not organically generated, but it's acquired, and so we provide that. It's legal, it's compliant, it's consistent with the GAAP, generally agreed upon accounting principles. But this collateral is going to play a very important role as we continue our discussion. So it certainly meets this first of the three C's, but it's going to be very important for the next of the three C's. So does collateral have to be AR? No. So let me make sure I'm clarifying. For example, so if you listen to what I said, I listed other like inventory, real estate, so forth. I'm just giving an example. We know a lot of small businesses don't have collateral. We include that. We include it in the form of AR, and that's going to be important as we get to the next of the three C's, which is capacity. Now, some of you like to call this cash flow, and it means the same thing. Now, this is where you'll start to get pushback from small business owners. They'll say, well, no, you don't understand. I need a loan to be able to get my business going. So I don't have cash flow. Or worse yet, they'll say, well, that doesn't apply to me. Well, it does apply to them. Everything we're talking about applies to this question. However, there are ways legally and ethically to dance around this issue, and the first of which is projections. So most lenders will accept projected cash flow even if the business isn't cash flowing yet. And again, that is included with the fundable shelf quote. Again, what we've learned through the years of helping small businesses is that a lot of small business owners, they don't want to spend a lot of time and effort becoming fundable. And so that's essentially, what the answer is. Be fundable, quote unquote. Now we're describing what being fundable means. Most small business owners don't want to spend time on that. So theoretically, we could work with anyone and create their own cash flow projections. However, most people don't want to spend time or effort on that, so it's included, it's already developed. Now, beyond that, we can also leverage collateral for capacity. So these two are kind of interrelated. And what does that mean? We can liquidate AR to create business bank deposits. So not only can we project what the future will hold for us, in other words, loan us some money, we'll put that to good use, and based upon that, here's how rosy, how optimistic the future looks. Also, we can demonstrate real bank deposits, which a lot of lenders really like to see. Because if a client is completely pre-revenue, I'm not saying that prevents them from being able to get funding, but it certainly strongly increases the probability of them getting funding if they already have some cash flow. Well, again, you get caught in the chicken and the egg. Well, sure, if I had a loan, I'd have cash flow. So what we do is we liquidate, if the client wants, liquidate some or all of the collateral to create cash flow. Because when we collect the AR, it creates bank deposits into the client's bank account. Well, a bank deposit is a bank deposit. Then it just becomes an issue. How do we account for that? How do we reflect that in our financials, in our QuickBooks, for example? Well, it would reflect as client income. So this is, I don't want to say a trick of the trade or a loophole, but it's an innovative way to show capacity and cash flow by A, having projections, which are included, And then if the client wants, we can liquidate some or all of the collateral to create bank deposits. Okay, so those are two of the three C's. And then the third C is credit. Now, so often people get so concerned about personal credit, but we really need to primarily focus on business credit versus personal credit. And a lot of you know this, but others don't. But there's different credit scoring algorithms. So let's say that often I'll talk to folks. I was talking to Tia Jones yesterday. I don't think she's on the Zoom today. And she stated what her credit score was. And we did a soft pull with her permission. And her score was much different. She said, "Oh, no, that can't be the case." I said, "Well, you have to understand there's different credit scoring algorithms. There's about 50. So for instance, on the personal side, which is not even what we want to focus on, but on the personal side, you would have a credit score for auto loans. You'd have a different credit score for mortgages, a different for credit cards and so forth. So what we need to focus on primarily is business credit. Now with business credit, that is included with the fundable shelf quote. So we had a recent training on that. And if you don't remember that training or you missed it, you can go back to our YouTube channel. But the highlights of that is we help clients have at least an 80 plus paydex score, which is through Dun & Bradstreet. And that's accomplished by adding primary trade lines. Sometimes I'm not sure if I'm supposed to put space or not between the word trade and lines, but what is a trade line? A trade line is a reflection of credit on the business credit profile that shows the business pays its bills as promised. So that's part of what we do. And we just had a big training on that. I think it was yesterday, about how we help clients add primary trade lines. I want to dig deeper into this because you'll sometimes hear about, oh, I'll go buy a trade line or someone selling a trade line. If someone is selling a trade line, it often, if not is illegal, it's often not real. So I don't want to speak negatively of anyone or any organization, but trade lines normally are where we get the shelf corp. So we get the shelf corp, and then we add primary trade lines that are real, that are usable. So let's clarify that. So these aren't just something on a piece of paper, they're real, they're usable. So we had a training where we talked about adding business credit cards. That's great, right? Because why wouldn't we want to have revolving credit under the business, not talking about personal, under the business, that reports on the business credit profiles. And by having those trade lines, that helps us build our business credit, because the algorithm that's used most often is called FICO SBSS, and those go from 0 to 100. And so we need to be cognizant of what our credit score is, but we're talking of our business credit. All right, so let's kind of conclude and then open it up for questions. Our question today is, what does it take to qualify for a large business loan? Well, we first need to have a business, and we'll just say a business in good standing. And that's a bit of a generic term or reference, but it means we have a business entity, it's compliant at the federal and state levels, and we have a unique commercial address. Sometimes I'll get asked about tax returns. Do we have to have tax returns? Well, if the business has been around through calendar years, then yes, we should have tax returns. And then sometimes people say, well, my business wasn't profitable, I don't need a tax return. Well, that's financial illiteracy. If the business has been around, we do need tax returns. So that's why so often clients will come to you to get a fundable shelf corp, because even if they do have a business, in many cases, it doesn't meet the credibility standards. So now we have a clear understanding of that. And then secondly, once we have a credible business entity, now we need to focus on the 3 C's. But again, that's included in the shelf corp. So the first of which is collateral. Most business loans, especially those above 25,000, are going to require collateral. Most people don't have enough collateral, or even if they do, they probably don't want to pledge their personal assets. So that's included. We provide accounts receivable, and that's very purposeful. That's very important because that AR plays a role in the next C, which is capacity and cash flow. We can demonstrate future cash flow using projections, and that's included automatically with every shelf corp. But also, we can, in addition to that, create real current cash flow by liquidating that AR that comes with it. And then the third C is credit worthiness. We really want to focus more on business credit than personal credit because we're trying to get a business loan, not a personal loan. Building of business credit is included. And with that, our goal is to get at least an 80 Paydex score, as well as improving our business FICO score. And the way that we do that is by adding primary trade lines, real usable trade lines. So, in summary, what does it take to have a fundable business? We need to have a business that's in good standing, and we need the 3 C's. What questions do any of you have about what it takes to have a fundable business? So Tracy brings up a good point. So dependent upon the use of funds, so let's go back to some of the other documentation, and she probably brought up a good point that I didn't cover well enough. There's also documentation, i.e. like a business plan, and that's included with the shelf corp for free. So within the business plan has what's called the uses of funds. So this tells the lender, what do we want to use the money for? Dependent upon the amount of money that we want to borrow and the use of funds, it will affect what we need from the 3 C's. So the standard shelf corporation, fundable shelf corp, comes ready to go for 100,000. So we include 100,000 of collateral, and we describe the use of funds as working capital for this loan purpose. But Tracy's correct. The larger the amount of funding that the client wants, that's okay, so that we don't have to stop at 100,000. That's what's guaranteed in writing, but we don't have to stop at 100,000. But now we're going to have to start altering the business plan and altering the financial projections, because what it comes with is standardized, and if the client wants something different, we're going to need to edit it. So there's 2 ways to approach that, as Tracy is referencing. Normally, what we'd like to do is just get the client their first 100,000 first, and then we can move on to subsequent rounds or tranches of funding. So that way we can deliver what we promised, you get paid, client satisfied, but we can keep going after more. You will run into some clients, though, that say, hey, no, 100,000 is a fucking waste of my time. You get me $1 million or I'm out of here. Well, okay, so we won't go for 100,000 first, but then we're going to obviously need to modify, especially the first 2 C's, to qualify for a larger amount. So we never want to mislead people. The fundable shelf corp comes ready for 100,000, guarantees 100,000 in writing. Can we go after more? Yes, but is it going to require some editing? We'd almost call that a hybrid capital raise, because now we're going to have to start making changes. All right, Michael asked, what's in it for him? So that's fair enough. I didn't plan on talking about that, but let's go ahead. So what's in it for you? So as a reseller, no cost to be a reseller, no contract to sign. If you want to become a reseller, go to 509 Pacific. As I mentioned earlier, we'll send you the editable agreement and other editable documents. If you want what we call a reseller marketing package with a landing page and that, you can do that. You don't have to. But what's in it for you? Well, Michael, you get paid twice, right? So income Number one is you're getting 5,000 up front. And I'm going to put an asterisk behind that because each of you who are a reseller, you decide what the price of the shelf corp is, the fundable shelf corp. Most of you are marking it up 5,000, so that gives you 5,000 up front. I know for a lot of you, an extra 5,000 per deal is just not enough, so you can certainly increase the price more if you wish. Income stream number two, which is the larger of the two, is 5% of the client's capital raise. So that pays out. So the client doesn't pay anything up front for a shelf corp, nothing up front. We get financing for them to pay for the shelf corp. That gets you the money, number one. I misspelled income, didn't I? And then for income stream number two, client pays this after each tranche, each round of capital raise that creates cash flow for you. So Troy's bringing up a good point. Clients can be resellers if they want. They're not required to, and it's not MLM. We're not charging them to be a reseller, as we've covered twice now already. But by being a reseller, that provides an avenue for additional cash flow. Sometimes we call this the opportunity fund when we're speaking to clients, because in addition to projected cash flow, and in addition to liquidating the AR, they could also participate in this if they wish. They don't have to. Now, I think Michael's point is, well, wait. If the client becomes a reseller, it cuts him out, cuts you out. And that's not true because we have the overrides. And again, we're not MLM or anything like that, but we have override income. So let's say that you brought in a client and they wanted to have higher capacity, higher cash flow, in addition to the projections that we do for free, in addition to liquidating the AR. They could also participate in the opportunity fund, so they're getting these deposits. But you might say, well, what's in it for you? The way that we do override income is it's the same. It's a match. So let's say that Prelo came in and brought Rod, and Rod's a client, and Rod wants to tap into the opportunity fund. So Rod would get this. And then the way that the override system works, Prelo, who brought in Rod, would get the same. So every time Rod brings in a client, Prelo's getting 5,000 up front. Every time Rod brings in a client, Prelo is also getting 5% of the capital raise. So I didn't plan to go there, but since there was questions on that. All right, so with that being said, if you have any other questions, feel free to let us know. You can call the nonprofit 509 Pacific at 903-352-3390. If you don't have your landing page, you don't have to have a landing page. You can create your own. But we see that those of you that have a landing page are generating about 10 times the income those of you that don't. So I would recommend getting the landing page. That's included in what we call the reseller marketing program, and just email us if you need that so we can get your landing page set up so you have a place to drive your prospects, the drip marketing built in, and the e-signature contract. Quick cash, not really the topic of today. That's also in 509 Pacific. We've said several times, if you're not a reseller but want to become one, you can do that on the same nonprofit website. And then we tend to record and post these trainings up on our YouTube channel for later viewing. Any other questions, comments, concerns? All right, Vincent, I'm going to close on this. Vincent brings up a point, and it's a crazy, relevant point, but we normally don't talk about it. Vincent asks, can he flip these? Yeah. So you could have yourself or a client that gets a fundable shelf corp. It includes this. You would get paid, and then you could turn around and flip, or the client could turn around and flip the shelf corp for a profit. So yes, it's like any asset. So if you owned a piece of real estate or an automobile or a couch or a TV, it's your asset. You could sell, and you could sell it for a profit if the market allows. certainly the shelf corps could be sold at a profit. Great point, Vincent. All right, thanks everyone. We'll see you back Monday morning. Have a great weekend. Let us know if you need anything. Bye-bye.